Hey all, welcome to ShareTreck. Today is a Tuesday. Yesterday was a horrible day, the worst ever we saw in the market in the recent past. And hopefully that gives us a chance to have a dead cat bounce today, which means a little bit of green and a bit of a relief rally. That said, let's get started and check out what the markets have in store for us today. Okay, let's get started with the news first. I have picked up only one CRISPR news item today to talk to you a little bit in detail because I think it's a very important development, and I'm going to show the news article to you right now. So this is a news article from MIT News. It says new CRISPR-based map ties every human gene to its function. So there has been a team which has been working on this project. They say the Human Genome Project was an ambitious initiative to sequence every piece of human DNA. The project drew together collaborators from research institutes around the world, including MIT's Whitehead Institute of Biomedical Research, and was finally completed in 2003. Now, over 2 decades later, MIT professor Jonathan Weissman and colleagues have gone beyond the sequence to present the first comprehensive functional map of genes that are expressed in human cells. The data from this project, published online June 9 in Cell, ties each gene to its job in the cell and is the culmination of years of collaboration on the single cell sequencing method Perturb-seq. So why do I think this is important? Let me preface this by saying that I'm not a scientist, I'm not a doctor, I'm just a regular investor, and my understanding of genetics is basically what I have read in the internet and in college. So having said that, I think that this particular publication, which was published on June 9, gives a blueprint for most companies to pick and choose which area of the genome they are going to work on, and therefore we should expect to see a lot of R&D duration cut short for many of these companies, because now they don't have to study and discover which syndrome is associated with which gene, because they already have a blueprint here, so they can pick up whatever they want and they can work on it. And this is going to reduce the time required for and the capital required for most of the genomic companies to come up with a cure for any gene-related syndrome or disease or disorder. So that's my thought about it. And for the next article, I want to take you to this one at Pharma Forum. And this talks about EHA Vertex CRISPR build case for gene editing drug. So basically, they are talking about CTX001, and CTX001 definitely has something to do with transfusion dependent thalassemia, TDT. And if you recollect, BlueBird was also working on a therapy which recently got a favorable response from external FDA expert group that said that they were okay with Beticel, which targets thalassemia. So this is the, in my opinion, I think this is the natural thing for CRISPR to do, to highlight that they have also made significant progress in the same field, so that people do not forget the work that they have done on something similar to what BlueBird has got. So I would say that this is a good move by CRISPR Therapeutics, but I don't think this is any new news. They already had this information for a while. It's just that they're taking the opportunity to present in the EHA Congress. And many companies present all their findings in the EHA Congress. So that's the way I would look at this. And then looking at the next one, we have here an article from Yahoo Finance says that as stocks enter bear market, Wall Street holds call to buy the dip morning brief. So basically, everybody's exhorting you to buy the dip, and this is going to lead to a green opening potentially this morning. We'll check it out when we see the indices later on. But unless we know that the market is at the bottom, there is no point buying, in my opinion, because you'll be catching a falling knife. We'll have to see how far the market is going to fall, because despite all the fall that has happened, oil has not dropped significantly. Russia-Ukraine crisis is not any closer to getting resolved, and neither is the supply chain issue going away. So with all those things said, and on top of it, we were on day 2 of the January 6th commission, and a lot of really strong evidence has come out, which is going to cause a lot of problems in the United States, because We should remember 38% of the population believes in Trump and what he is saying, and they are not watching the news from other media except from Fox News or OAN or channels like those. And therefore, it's going to be a rude shock for them when they find out these things. And it's likely to create a lot of instability. And we have the elections, midterm elections coming up. So everything is around there. And I am a bit circumspect about how soon the market is going to go up. We would have temporary gains in which people can release their money and take out money from the table. That would be my opinion, personal opinion. Of course, this is not financial advice, but this buy the dip strategy is just to get sheep to the slaughter, in my opinion, at this point of time. Please put in the comments what you think about this. And then next, I would like to go and show you another news article. This comes from BBC. Stocks slide over global economic concerns. So we should remember that I have put it in my previous videos as well. There is a global economic problem because China has its own issues. China has a different problem. It has to prop up its economy. And also China has lent a lot of money to African countries and to Sri Lanka and other places, and has built infrastructure for them with the money that they have lent. So those countries are not able to pay back. So that's also another problem. Sri Lanka is almost broke. Today, Pakistan had a huge stock market dip as the government increased the tax in order to bail the country out of a really bad situation. So that they are also having a lot of trouble. And we should remember that Turkey also has got issues. Iran is again in a sanctions regime, and its oil is not coming out yet. So there's a shortage of oil supply. So all these things are not going away. I don't see them going away in a day or two. So I don't understand how these experts here are saying buy the dip. I mean, if you buy the dip, there is potentially going to be another fall 2 days down the line. And how are you going to recover your money? You'll be further deeper into the red, in my opinion. So I think this headline is very apt because it says the global economy has concerns. It's not just isolated to US. Of course, US will have oversized influence on the global stock markets, and US is not in a good condition at this point of time. And also in Canada, we are having problems because 18% of the households are going to have trouble paying their mortgage if the interest rate goes up further, and interest rate is going to go up further. That said, let us look at the fear and greed index. We are back from fear into extreme fear. We are at 16. We were somewhere around 32, if you recollect, before. And today we are back into extreme fear at 16. So it's like a 2-step forward and 2-step back. We are dancing in this area. And I think now is the time to go and have a look at our COIFIN charts. And we can see the performance from June 11th to June 13th etched out here. I'm just going to change this and make it as performance for June 12th. So here we are. So we started let me go and make this as a 1 day. And here we are. We started the day and we started going down, and then we went up, and then we finally came down sharply. The worst performer of the lot was NASDAQ. NASDAQ did really badly with minus 4.69% drop. And then we had S&P 500 with a drop of minus 3.88%. And finally, we had the Dow Jones Industrial Average down minus 2.79%. And if we were to go off to a 1-year time frame, you will see that we had been at a peak for all of these indices somewhere around November 19th. And right now we are at extreme drop, and everywhere we have dropped more than 20%. So all the markets are in bear territory at this point of time. With that said, let's go and have a look at NASDAQ and the other indices as well as crypto and gold, and see what they try to tell us. Let's start off with futures first. Let me go into the futures section. And as you can see here, the futures are positive. NASDAQ future is positive, up 0.39%. And I have a weekly candle out here. This is a weekly time frame. Each candle is 1 week. And as you can see here, we had this diagonal line of resistance, which we followed for the longest time, and then we broke out of it. Now this diagonal resistance is forming some kind of a support out here for us. And I'm just going to change the magnification so that you can see it clearly. So this is the line of support right now for us. And we have bounced off this support. As you can see, there is a tiny wick out here that shows you that we bounced off this support. And today we are likely to go back up again as the dead cat bounce happens, and then we'll come down again. So we'll start somewhere out here at 11,346 that we are seeing right now, 11,371. And then we are likely to go up a little bit and then come back down. And this diagonal line of support is still going to perform its function, and it will arrest any further fall. Also, you can see that the MACD is down, absolutely bearish and away from the signal line. It has just got a little more space to go down. And our momentum is also almost off the charts, going down, and has become very weak. So whenever these kind of things happen, there is always a bounce back because we have gone to the extreme. The pendulum has swung to the extreme. So definitely expect some kind of a dead cat bounce today. We'll check that out when we look at NASDAQ. But that's what I think is happening today. And if you look at the XLY by XLP, we can also see that people are going further away from risk. And I'm going to go and look at the indicators, and I'm going to start off with US oil. I'm going to change this into a 1-year time frame so that we have a 1-day candle. So each of these candles are 1 day, and you can see our diagonal line of support is nicely holding on. And right now the support is extremely strong because we have got the 9-day exponential moving average, which is moving in conjunction with the diagonal line of support. So it's extremely strong support. So we are likely to bounce off that. And this is the candle for today, for 14th June. It's a doji candle. It is green. It is formed above where we ended yesterday. And therefore, it looks positive today. And pre-market, we can see that we are open 0.44% as far as US oil is concerned. So this is looking very strong. So there's a good chance that oil is going to keep on going up. The only place where you have a pause is because the MACD is tending towards the signal line, even though it is bearish. So that's a sign of weakness. And the other place that I would look for is the momentum. Momentum is still above average and pushing up moderately. So I'm thinking that this diagonal line of support is going to hold on for today. And if we manage to go to 124.71, we are likely to be pushed down from there because that's an all-time high in the recent past for oil. And we have always bounced back down from there. So with that said, I'm going to look at our VIX. And when I look at VIX, I can see that we are here. This is today's candle. This is a live VIX. And we are within the range of yesterday's candle. So things have not deteriorated much, but we have fallen below where we ended yesterday as far as the VIX is concerned. So it's slightly better than what the situation was yesterday. And that also lends itself to a dead cat bounce because you see a negative out here, minus 1.03 in VIX. And that said, let us go and look at put-call ratio. Yesterday, we ended the put-call ratio by breaching through our resistance of 1.31. So that continues to be a support for us. And then we have a resistance here at 1.3742. And this particular candle formed yesterday. So I'm thinking that today's candle is likely to form somewhere between this support and this resistance. And there will be an attempt to go beyond 1.374. And that's going to be very, very difficult because in the recent past, we have not gone above that. And if we go far back, the only time when we went above that was somewhere around 2020, February to April 2020. And that was a long time ago. So I hope that we don't break through it, because if we did break through that, it's going to be all hell breaking loose, because that will be extremely, extremely bearish position. And also we should not forget this Friday is quadruple witching, where all option expiries of various time frames get expired, and therefore it's going to cause havoc on Friday. So just watch out carefully. And when the experts are telling you buy the dip, keep this in mind. None of the risks have been resolved, and we have quadruple witching coming up on Friday, and people are averse to take risks and leave money on the table during weekend at times like these. So we should expect for the worst on Friday, in my personal opinion. So just be careful out there. Next, let's go on to have a look at the US dollar index. The US dollar index continues to go up. This is today's candle. We started where we left off yesterday, and we marched ahead. We have an absolute limit out here at 12,956, which is this red line out here. And if we breach that, then we are going to be in serious trouble, because there's going to be almost no money available for any other asset class, and everybody is going to move away into cash. And you can see the cup has been formed, and potentially this could be the handle forming, because if we had a dead cat bounce today, this is likely to come down. And when it comes down, it will form the first leg of the handle. So if you have a cup and handle pattern, the chances are that there is going to be a spike upwards. Now let's go on and have a look at QQQ and see what QQQ is doing. And we can see that we are at the last support out here at 273.52. But fortunately for us, the dead cat bounce is starting to manifest. And you can see that pre-market, we have NASDAQ up 0.50%, which is a small percentage, but still it is something. And also I would like to highlight that we are still within the bear channel that we had traveled in for the longest time, all the way from 22nd of November 2021. So if we breach through 273, our next level of support is going to be somewhere around 263, as I mentioned in the end of day video yesterday. So that said, let us go and have a look at S&P 500, because it's a much more stable and reliable indicator. You'll see a whole lot of gaps here in S&P 500. Gaps are something that all chart people say needs to be filled up. Typically, it gets filled up in 48 hours. If not, then it will take a much longer time. But it does get filled up most of the times. Majority of the times. There may be hardly any instances where it was not filled up. So we are guaranteed that we are going to go back up in order to fill this. The question is when. And we have our support here at 369.94. And we also have a support here, which is likely to be breached today when we bounce back down after the dead cat bounce. So our real support is 369.94 for S&P 500, and we already see the MACD is absolutely bearish. Momentum has fallen steeply. So once it goes out of the civilization line, it's bound to turn around and come back up. Maybe it's going to happen today that we will touch this 30.74 and then jump back up again, only to go down later on, because as I mentioned, nothing has changed in the market except all these mirages that are coming up here and there. So with that said, I think I would like to go and have a look at our crypto as well as gold. We haven't seen them in a long time. So let's go and start off with Bitcoin. And you can see Bitcoin has dropped like an anchor. It's going down, and there seems to be no limit to how low it can go, because the MACD is also bearish and moving away from the signal line, and our momentum has fallen down. One of the things I would like to mention here is that some of the exchanges are freezing orders, and there's some cash crunch going on. There's a lack of funds, and as US index starts absorbing all the dollars, there's going to be even more dip in cryptocurrency. If I zoom out, I think that I would think that 12,175 is a place where we might find some kind of a sturdy floor, and the intermediate floor could be somewhere around 19,911. If we go below 19,911, let me just put this numbers out here. If we go below 20,233, then we are going to be having a very steep fall. Right now we are 21,919, and that is somewhere out here. This is the point. So this is the next level of support that you'd get. I'm going to mark this as a resistance because we have fallen below it. And then the next line of support after that, I suspect, would be somewhere out here. And that is going to be around 12,981. So that's going to be a steep drop. So it's all gloom and doom for Bitcoin if it falls below 20,233 today. And by the looks of it, it's likely to do that. But at the same time, if NASDAQ does bounce back, there will be some kind of a sympathetic rally in Bitcoin. Let us look at gold. Gold also is suffering marginally down minus 0.03. That's also because the US dollar index is taking away the money. But you can see that there's a slight recovery. Today we opened very low, much lower than where we were yesterday, and we are going on our way back up. So gold has got a MACD which is just about to cross the signal line, and momentum is below average and pointed down. So gold is likely to lose value today as we go further. And with that said, I would like to go and have a look at our genomic stocks and see what they are telling us. And I'll keep it very short because all technical analysis is going to mean nothing today because the market is in extreme state of panic. Nobody is going to look at rhyme or reason. They're just going to book profits where they can. They're going to cut losses where they can. And I would be sitting away from the trading desk today. I'm not going to do any trades. We'll just watch things go down. Once they start going up steadily for a week or so, I would start investing. And right now, I don't think 2 quarters of consolidation and third quarter being bullish is the case that I would go with anymore. I think that even the fourth quarter, we are still going to have a little bit of overhang of all this because all the risks are in place, and the Fed is going to continue to increase interest rates, and that's only going to destroy the demand and reduce employment because the dollar is getting stronger, imports are getting cheap, so domestic manufacture is going to be hit, and therefore unemployment will go up. We are heading into a stagflation situation because people have to continue buying food, clothing, and shelter, regardless of how expensive it becomes due to oil and wheat prices going up. So again, I repeat my call that all the global leaders have to work on an extremely urgent footing in order to resolve the Russia-Ukraine crisis and get us back into some kind of a normalcy. With that said, I would like to go into the genomics. So here we have the watch list for our genomic stocks, and BlueBird is still on the top with a gain of 14.48%, but you will see pre-market it has lost minus 0.93. And you should also recollect that BlueBird started the day with a gain of 66%, and it gave up most of the gains, as you can see in this huge candle out here. And we also have a gap up situation, and that gap has to be filled, and that's likely to be filled today. And BlueBird is likely to suffer as compared to the other shares because it was the biggest gainer, and the others had been biggest losers, and the biggest loser being Caribou Biosciences. It has got a gain of 4.12 today. So that is a proof for you that there is a dead cat bounce happening, and therefore you'll see that the first part of the market is going to be the dead cat bounce. And also remember, the first hour is a mature hour, so all the amateur traders are going to come in into the market, and they are going to start buying because they see a dead cat bounce out here, and they are the ones who will be taken advantage of by the professional traders somewhere around 10:30, when you can expect the market to start falling, and maybe it will pick up again towards the end of the market. That's my view. It's not a technical analysis view, but it's more of a view that I have from my experience of seeing the market in the last so many years. So I think that's what is going to happen. And with that said, I'd like to bring this video to its conclusion. And if you like this video, please press a like out there. And if you're not yet subscribed, please subscribe and help us grow this channel. And I'll be coming up with a few more videos this week that's going to talk in detail about some of the CRISPR developments as well as some of the companies in our watch list. So tune in for that, and I'll see you again later. Bye for now.